If you're familiar with accountancy, then you'll know you're supposed to do your accounts on the accruals basis. So what you've incurred, not necessarily what you've spent. For most of you in the room, it's now just on a cash basis for landlords. It just keeps things simple. We can put receipts through as and when we get them. And now, with the clawback on interest, I know lots of people are starting to wonder about whether they should transfer their property into a limited company. As a sole trader, your tax base is very different to that as being a limited company. Simple questions. Do you already have a company that you run a business through? How many properties do you want to purchase in the future? So you need to think long term. As Nigel said earlier, think of this as a 5, 10, 15-year investment and then look at where you need to be. Do you intend to sell the property and when? So as a sole trader, you're going to pay tax on your income. You all have a basic rate band of £11,500 to £12,000, but you're then going to pay 20%, 40%, 45%, depending on where you fall, and then an enhanced rate of capital gains tax on the eventual sale of the property. So depending on whether you're a basic rate taxpayer, you pay 18% capital gains, and you pay 28% if you're more than that. There is an annual exemption. Limited company, I'm not going to go right through this. I can see you glazing over at the number of bullet points on there. But there are ways of getting money out of a limited company which reduce your tax, especially if you don't need it all. You pay dividends to yourself. This year, you could have £5,000 worth of dividends out of a company and pay no tax. Next year, unfortunately, it's clawed back to 2,000. So the government's looking at that as well. But the level of tax you pay is lower on dividends than on straight income. And you also get the opportunity then to walk around and say, I'm a limited company, we've got 6 houses in it. And the reason I said that is, if you do have a limited company, the information is public. So you can't, your personal tax return is your personal tax return. Limited companies have to file accounts, which any one of us in this room could go onto Companies House website and find them. So you need to be aware of that one too. When you incorporate, and this is where what I was alluding to earlier, what you'll find is you're changing the asset, you're changing the ownership of the asset. So if you've had a property for 10 years and you want to move it over, there's going to be a capital gains bill. Unfortunately, there's nothing we can do about that. You'll also may have a struggle, Heidi, with getting the mortgage moved over from your name into a limited company. Other company developments, not very exciting, I'm skipping over them. I filled this a lot when I was writing it, I do apologise. But when you come to then sell the company and wind the company up after you've decided to retire, you've got your portfolio, there is capital gains due on the sale of the shares of the company. That's assuming you don't sell the property, but you sell the company itself. Forward. And then other bits and pieces. Rent-a-room relief was increased because suddenly too many people were going to be falling in and having to do a return because of an Airbnb. The stamp duty change, I'm sure you know about from 2.5 years ago. And again, just not wrapping up quite, but talking about limited companies versus sole trade. Where's the capital coming from? Will the portfolio grow? And will the properties be sold at all? Will they be kept? How are you going to treat the assets? A little bit about tax assist accountants. I thought I'd leave the exciting bit for the end. We are a franchise network, as are Belvoir. I want to say Beaver because that's how it should be pronounced. Thank you. I'm glad someone else knows. We've got over 300 offices across the UK. We're the 21st largest network of firms in the UK. We actually now operate in the States, Australia, and Canada. We've got 70,000 clients, and they're small businesses. Like the larger practices tend to want big companies to work at. We don't. We want to work with people like you, small business owners, so that's where our expertise really does lie. And we normally offer a fixed fee basis. So if you come and see me, I'll work out what we're going to do for you, and that's the fee. You don't come in and I say, well, you've been in for 15 minutes, right? I know you had a cup of coffee for 5, but there's an extra 200 quid on your bill. It's not going to happen. We'll just roll it through at the rate. Range of services. You can probably guess what we do as accountants. Business accounts, taxation, personal tax. We'll do your bookkeeping and your VAT returns, payroll, ready for real-time information, which is HMRC wanting to know everything the second it happens in terms of someone being paid. Construction industry scheme. We can help form a company for you. Though I won't tell you that. If you need a company forming, come and see me. I'm supposed to charge several £100s for it. We can get a company off the shelf in about 10 minutes. I would never dare charge anyone for that. And of course, business plans and cash flow forecasts so that you can go and see Heidi and persuade her that you've got a good plan and she should give you a mortgage. So we will always try and save you time and money. If you want to come and see us, my details are around the place, so please do get in touch. Come in and have a chat. We'll see what we can do for you. If we can help you, great. If we can't, we'll be honest and say that. Get a fixed quote for the work going forward. So I'll take any questions towards the end of this. Please do feel free to get in touch. And I think Heidi's up now. Is that right?
Yeah, I think so.